Hello, today we are solving May 2024 paper question number 6. The statement of financial position of Kowloon Tong Stores PLC on 31st March 2023 and 2024 are given as below. So the first question is about prepare the following sections of statement of cash flow. Okay, it is a statement of cash flow for the year ended 31st March 2024 in accordance with the International Accounting Standard IAS 7 cash flow statements. So the first step is to prepare cash flow from the financing activities. So for the financing activities, okay, whatever in the additional information they have given, try to underline all the things that is related to share and dividends. Okay, share, okay, issue of ordinary shares, repayment of loan or issue of a debenture, and dividends. If you are able to identify these things, will go under the cash flow from financing activities. If you see that here I have underlined, first there is a final dividend was issued, redemption of ordinary shares has happened, there was a issue of bank loan, issue of debenture, then again an interim dividend and dividend to preference shareholders. Okay, so these are the cash, okay, cash flow from the financing activities. Now after writing this, now let's see whether you have to add or you have to subtract. Okay, what are you going to do with those numbers? First one is a redemption of ordinary shares. Okay, so whenever there is a redemption of ordinary shares and you have, okay, so when you redeem shares, you have to pay the money and buy back those shares. Okay, the company is going to pay money to the shareholders and they are going to buy back those shares. So it is a cash outflow happening. So any cash outflow happening here, you will have to decrease. Okay, so you will have to less, okay, less the amount. Okay, less any cash outflow happening, you will have to decrease. Then you have done a bank loan repayment, this is also a cash outflow, you will have to decrease. Okay, and then you have issue of debenture. Okay, issue of debenture, when you issue debenture you are getting a sort of a loan, so it is cash inflow, you will have to add. Okay, cash inflow due to the issue of debenture has happened, so this amount you will add. Then dividends paid, okay, the dividends paid is cash outflow, so you will have to decrease. Okay, any you will have to decrease, and then you will calculate the net cash from the financing activities. So let's calculate this. First one is the redemption of ordinary and premium shares. Okay, so to do this, so now how many ordinary shares? Okay, what is the amount they paid? They are saying 2 million ordinary shares of 50 pence each. So 50 pence each, and the premium is 0.125. Okay, ordinary share value is at 0.5. So let's, and the number amount is 2 million. So let's write it here. The value or the cost of it they would have paid is 2 million times 0.5, so that value is going to be equal to 1 million. So they would have paid 1 million, okay, amount, and they would have got back those shares, they would have bought back those shares. And then for the premium amount, okay, it's the same thing, but it was issued, they had bought it back at 0.125, so that value is going to be equal to 250,000. Okay, 250,000. And then you did a bank loan repayment. Okay, then they did a bank loan repayment. So bank loan repayment of how much? So on the 1st October the bank loan repayments were made. So for this you will have to go to the financial statement and see where they have how much of bank loan has been paid. So 1850,000 minus this amount 1650,000. So let's write it here. 1850,000 minus 1650,000. So that value is going to be equal to, so this is the bank loan that was repaid. Okay, bank loan that was repaid. Decrease in the loan amount that is reflected in the financial statement was the amount that was repaid. Okay, 200,000. Okay, so that is equal to 200,000. So this was the bank loan repayment that has happened. And then you have issue of debenture. Okay, when you issue debenture, you're getting a loan amount, so that is worth 500,000. So that is cash inflow. So I'm going to add those. Okay, so any cash outflows you will have to reduce, any cash flows into the business you will have to add. Okay, and calculate what is the cash flow from the financing activities that has been generated. So that happened. Then dividends paid. So the dividends paid are equal to, first one is the final dividend that was paid. Final dividend that was paid is equal to point um 0.011 per share was paid. How many? Okay, how many number of the number of shares you have to find out. What is the number of shares? Here you can see that the share capital for ordinary shares is 8 million shares worth of 0.5. Okay, 0.5. So let's calculate the number of ordinary shares. So number of ordinary shares is equal to, okay, the share capital value here. Okay, whatever you have written here, the share capital divided by the rate. So that so the number of shares into the rate will be equal to share capital. So share capital divided by the rate will give you the number of ordinary shares. So that is equal to 8 million divided by 0.5. So 8 million divided by 0.5 equal to 16 million worth of ordinary shares. So the number of ordinary shares is equal to 16 million. Now the final dividend that was paid was equal to 16 million ordinary shares, and they were paid at the dividend rate that was paid was 0.011 per share. So the value will be equal to 176,000. So that is equal to 176,000. Because it was a cash outflow, you will decrease it. So cash outflow, you will decrease it. Then you have the interim dividend. Interim dividend they paid was that 0.004 per share. So interim dividend was paid on 18th October. Okay, per share. So we have to calculate what was the interim dividend, number of interim dividend shares. Okay, because it is not paid to the premium shareholders. So how many number of, okay, how many number of ordinary shareholders are there? Okay, it is 16 million. Okay, 16 million minus, we can see that the premium share, okay, the premium share is about 2 million. Okay, so that is equal to 14 million ordinary shareholders are there. So only they are paid the dividend. So that is equal to, so 14 million. Okay, and each is paid at the rate of, okay, they are paid at the rate of 0.004, okay, per share. So that is equal to 56, that is equal to 56,000. So this was the interim dividend or the cash outflow that happened. Then they are saying preference shareholders receive their dividends in full during their year. So we will see how many number of preference shareholders are there. Okay, worth of £1. So here, so the number of preference shareholders. Let's calculate the number of preference shareholders. Number of preference shares is equal to 500,000, okay, divided by the rate is £1, so that is equal to 500,000. Okay, so this is the number of preference shareholders. So the number of preference shareholders is equal to 500,000 times, and they were paid at the rate of, they received the full dividend, so 5%, so that is equal to so 5% irredeemable preference shareholders are there, so the rate is 5 divided by 100, so it is equal to 0.05, okay, per share, 0.05 per share. So that is equal to, the value is going to be equal to 75,000. We do minus 1 million, minus 250,000, minus 200,000, plus 500,000, minus 176,000, minus 56,000, minus 75,000. So the net cash flow from the financing activity is 1,257,000 is the net cash generated from the financing activity. Okay, that is the net cash from the financing activity.